30 minutes into the U.S. trading day on this Friday, February 23rd. Here are the top stories we're following. Records on records. Stocks around the world hit all-time highs as the global rally rolls on. The S&P 500 hit yet another record this morning, fueled in part by, you guessed it, NVIDIA, set to become the first chip maker to hit a $2 trillion valuation in a milestone for the semiconductor industry. We'll discuss how that's shaking up the ETF world in today's ETF Friday. And bookings, bad day. A disappointing forecast for room reservations sends shares spinning, with the war in the Middle East weighing on results. CEO Glenn Fogel joins in just a bit. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. And you take a look at markets on this Friday, and you can see we're still green, at least when it comes to the S&P 500 and the NASDAQ 100, but much quieter than what we've gotten accustomed to. The S&P 500 up slightly this morning, breaking above 5,100 for the first time ever. You take a look at big tech, the NASDAQ 100 trying to hold on to gains here, currently up about 0.1%. Of course, we'll see how that settles up. And I did want to take a look at the Philadelphia Semiconductor Index. Of course, we've been talking about NVIDIA so much this week. That's really been boosting this entire index as well. But you can see taking a bit of a breather on this Friday with the stocks currently off by about 0.5%. But let's get more details on the composition of this record run. We're going to do that now with Abigail Doolittle. It's okay. Abigail Doolittle, thank you for that. And let's get more on these markets now with Encore Crawford, Executive Vice President and Portfolio Manager over at Alger, joining me on set. Great to have you with me. And I'm excited because I take a look at your notes and you declare that it's no longer the Magnificent Seven, it's the Magnificent Four. What happened to the other three?
Yeah, so
President and Portfolio Manager over at Alger. And let's zoom in now and take a look at what's moving markets underneath the hood. We're going to do that with Bloomberg's Bailey Lipschultz.
Yeah, Katie, if I told you a stock was up 15-20% in the tech space and not tied to AI, you got to bet on earnings, and that's what we're seeing.
As always, happy Friday. That is Bloomberg's Bailey Lipschultz. And like Bailey said, Booking CEO Glenn Fogel will join us in just about. Well, luxury EV maker Lotus started trading on the NASDAQ today. The company going public via a SPAC in the latest test of both the EV and the SPAC markets. And joining us now for more from the NASDAQ, I'm pleased to say, is Alexis Lee, Lotus Tech CFO. Alexis, great to have you with us. So let's talk about timing here, because Lotus Tech has been looking to go public since at least early 2022. Why now?
Well, morning. Thanks for having us today. I think
All right, time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, the commercial space startup Intuitive Machines making buzz after its lander touched down on the moon yesterday. That, of course, is the first private aircraft to land on the moon's surface intact. That is the key word there. Now, next up, Carvana hitting the gas as profits topped Wall Street estimates. The used car retailer also saying that it expects improved earnings this quarter, and the stock is absolutely soaring up about 35% at the moment. Can't say the same, though, for Warner Brothers. Of course, missing fourth quarter estimates. The media giant continues to struggle as consumers cut the cord and advertisers pull back on spending. And you can really see that in the shares this morning. We're down over 12%, and we are looking at an all-time low for Warner Brothers Discovery. And of course, you can follow all the latest company buzz on TRE and Go on your Bloomberg terminal. Now coming up, turbulent times for online travel company Booking Holdings. The company issuing a disappointing forecast for travel reservations. Well, shares of Booking this morning are lower after issuing a disappointing forecast for reservations. The online travel agency citing headwinds from the Mideast war. Natalia Kunijevich is here to break it down. Of course, our thanks to Bloomberg's Natalia Kunijevich. And here to help answer those questions, we're joined now by Booking Holdings CEO Glenn Fogel, of course, the president and the CEO. And Glenn, I do want to start with the geopolitical question, the war in Israel, which, of course, as Natalia walked us through, impacted results. You said actually that fourth quarter room nights booked gained 11% when you exclude business associated with Israel, which was, of course, significantly impacted by the war. And I know it's an impossible question, impossible to know, but how is Booking modeling that into your forecasts, for example?
Yeah.
U.S. consumers are actually traveling. Are you seeing travel to Europe, to Asia really lift that demand, or is it elsewhere?
But you know, we are incredibly global, so we do a tremendous amount.
In particular at this moment, what are you seeing when it comes to Asia? Have we seen bookings there recover to pre-pandemic levels?
Well, it's really exciting to see the growth in Asia.
Bright spot, at least an area for opportunity there. But broadly speaking, when you look at travel demand that you're expecting for 2024, how does that compare to what we saw in 2023, which was pretty robust?
Yeah, no, there was a lot. People were talking about revenge travel. People who hadn't been able to travel during the pandemic, so they really.
Because that's something else that I'm wondering, that when you look at your offerings right now, where do you see the most opportunity for growth? What is really going to drive that growth forward when you, again, look at your different operations?
Right. So, look, the basis of travel are always, first of all, you got to give a great price. People.
This conversation. Thank you for your time this morning. That, of course, is Glenn Fogel. He is Booking Holdings president and CEO. Really interesting conversation at a global level about where demand for travel is right now. But let's zoom back out and take a look at what markets are doing right now. We're going to do that with Abigail Doolittle.
So we're looking at another solid day for stocks.
Amazing to watch big tech just completely ignore the bond market, those market cap monsters. I'm sticking with that one. Bloomberg's Abigail Doolittle. Thank you so much. Now, coming up, we'll hear from Nobel-winning economist Paul Romer. All right, it's time now for Wall Street Week. And the host of Wall Street Week, David Weston, he sat down with Nobel-winning economist Paul Romer to talk about the shift in global trade relationships, what it means for the U.S. economy. And that was Nobel-winning economist Paul Romer. And sitting beside me now is David Weston, Wall Street Week host, joining us now. Really unconventional approach to free trade.
Yeah, I had not heard it before. I've done some in trade before because we typically talk about free trade or protectionism, and those are the two alternatives, right?
Yeah. One party, Democrat or Republican, is either Biden or Trump campaigning on this? See if this catches on. But that was a great conversation with Paul Romer. But the big show is tonight. Yep. What do you have coming up?
Well, we're going to continue
It's great to see you, of course. That is David Weston, the host of Wall Street Week. This is Bloomberg. Well, NVIDIA not only delivered for shareholders, but also for ETFs that place leverage bets on the chip maker. For more, we're joined now by Bloomberg's Emily Greifeld. Talk to me about tickers.
Well, this has been a big week for double leveraged NVIDIA ETFs, but good luck to them.
Yeah, we'll probably see some people buying the top, of course. It feels like we always see that in these crazy shiny object ETFs. Bloomberg's Emily Greifeld, thank you so much. Now, we take a look at markets right now, and you can see that we are looking at gains here. Of course, quiet, not exactly what we've gotten used to over the past day or so, but still